Is anybody calling you and saying effectively, Mark, what the heck is going on? How much longer can this last?
Well, you're right on point, Brian. People are calling often because, you know, the ghosts of 2008 are still out there. I don't think a week goes by without somebody telling me they're worried about a crash. And that's absolutely, totally rooted in emotion. Because when we look at the underlying fundamentals, we've got almost 25% year-over-year S&P earnings. That is not a formula for a stock crash or a major correction at any point in time. But the emotions are getting in tune with these headlines. And the headlines are tariffs, it's trouble out of Washington, it's the slowing emerging markets, it's Argentina, it's Turkey. And when you focus on those nerve-rattling headlines, it takes away from what's really going on, the strong consumer, earnings, reasonable global growth. So the underlying picture is strong, and I think investors need to just focus on the economic data, the financial data, and not the headlines.
Do you agree with Jamie Dimon that whatever the impact is, and there will be an impact, as we talked about from Huntsville, Alabama a couple of days ago, industries will be hit. But the overall economy is strong enough, for now anyway, Mark, to withstand any kind of a bump in taxes due to tariffs? Because a tariff really is just a tax.
Well, I think Wall Street's already voting on that. Certainly, this tariff discussion has been covered widely. So for the market to be creeping up while rhetoric has been increasing shows that what Jamie Dimon is saying is true. It's a relatively small percentage of the economy. It's nerve-wracking. It'll trickle through in ways that we don't even know yet. But the bottom line, it is a $20 trillion economy. So we don't think it alone is enough to bring it down. We think trade and tariff troubles in concert with a rapidly rising Fed or maybe an event we haven't even seen yet could be a formula.
I guess, Mark, and I'm sorry to cut you off. We've got some breaking news coming up in just a second. I guess if I had to take the other side, right, because there are a lot of bullish arguments, you just kind of said in some ways the bearish case could be we just don't know. We can say it won't matter or it's only going to matter a little bit, but we don't know in the end, and I guess that unknown may be the great variable of this market.
Well, I think that's a 2019 or a 2020 discussion.
Okay.
For now, the momentum is on the side of the market. We think that the data is clear. Keep your eye focused on these earnings reports. Look at the strong jobs market, the consumer, and let the tariff talk subside a little. I think as we approach the election, we're going to see some calming of this down because the Trump administration wants some victories before the midterms, and I think that's going to be good for the markets.